So Bitcoin represents a new asset. If it's a high performing asset, right, and it's the best performing asset in 15 years, it's up like 48% in the past 48 months versus the S&P looks like a 12 or 13% performer. It's a performing asset. It's a new asset. And now you have $11 trillion money manager that writes a white paper and says it's unique and it's not correlated.
The digital asset space is transforming financial markets and redefining norms as regulations evolve and institutions embrace digital currencies. Bitcoin, in particular, continues to solidify its position as a groundbreaking asset. In an interview, Michael Saylor, American entrepreneur and co-founder of MicroStrategy, highlights Bitcoin's growing influence amid shifting regulations and economic changes. He views the Federal Reserve's more accommodative policies as generally favorable for Bitcoin. Saylor emphasizes Bitcoin's legitimacy and consistent performance over 15 years, contrasting it with traditional investments. He notes institutional support from major financial players like BlackRock, positioning Bitcoin as a unique, uncorrelated asset that offers portfolio diversification and hedging opportunities. However, he acknowledges the importance of regulatory clarity, which could either strengthen or hinder Bitcoin's role. Similarly, in another interview, Cathie addresses the increasing regulatory complexities impacting the intersection of finance and technology. She advocates for reforms in digital asset regulation, mergers, and acquisitions, envisioning progressive leadership to drive innovation and expand investor access. Wood also highlights the impact of influential figures like Elon Musk in promoting efficiency and forward-thinking governance. For more insights from Michael Saylor and Cathie Wood, stay tuned.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I love to see everyone there. Peace out.
Well, I think that if we're talking about the Fed, we're talking about an interest rate policy, and I think the interest rate policy is going to be a bit looser. And so all assets will be a winner with a less restrictive Fed, and I think the writing is on the wall there. I think with regard to regulatory clarity, the real key point here is the vast majority of the money in the world is sitting in 60-40 bond portfolios or sitting in real estate. So the traditional money, conventional money, is sitting in a 60-40 portfolio or real estate. The scared money, the traditional scared money, is sitting in gold. And so the only thing that Bitcoin needs to win is just to be acknowledged as a legitimate asset class. When money managers like Fidelity or BlackRock point out that this is an institutional grade asset, a digital gold, a digital property, or a digital capital, that's the most important thing that's happened in Wall Street in 40 years. And last week, BlackRock published a white paper where the headline was Bitcoin, a unique diversifier. And they said not only is it a legitimate asset class, well, by the way, the regulators help with that. When the regulators approve spot ETFs and when they approve options trading, they're signaling to all these traditional old money investors that this is not tulip bulbs. This is not a scam. This is legitimate. So they do their part by showing it's legitimate, but BlackRock does their part by pointing out it's a unique diversifier. So Bitcoin represents a new asset. If it's a high performing asset, right, and it's the best performing asset in 15 years, it's up like 48% in the past 48 months versus the S&P looks like a 12 or 13% performer. It's a performing asset. It's a new asset. And now you have $11 trillion money manager that writes a white paper and says it's unique and it's not correlated. So if it's not correlated, that means the 60-40 portfolio can be replaced with a 55, 35, 10 portfolio. And so do the quick math on what happens when 10% of hundreds of trillions of dollars flows into an asset that only has 450 Bitcoin a day available from natural sellers. That's $25 million a day of natural selling. It's not that much. And so when people reallocate their investment portfolio, then that's very bullish for the asset class. And all this regulatory clarity, regulations mean different things to different assets for sure. But Bitcoin is a very simple principle. It's like just digital capital. So I've said before, it's either going to zero or it's going to 1 million, because if it's tulip bulbs and if it's not legit, if it's a scam, it's just getting regulated out of existence, right? But if it's legitimate, it's basically everybody's holy grail. It's like basically the font of eternal youth for investors. It's the thing everybody wants, a high performing asset not correlated to the rest of their portfolio. You don't even have to have to agree that you understand it. You just have to agree it's legitimate and it's uncorrelated. And at that point, a portfolio manager says, well, just give me some of it.
Michael Saylor argues that a more lenient Federal Reserve interest rate policy would benefit all asset classes. Noting signs of such a shift, he underscores Bitcoin's exceptional long-term performance, suggesting that even small portfolio reallocations toward Bitcoin could significantly boost demand and enhance diversified investments. On the other hand, Cathie would voice his concerns over the surge of regulations, particularly regarding the SEC's approach to cryptocurrency and digital asset legislation, as well as the FTC's stance on mergers and acquisitions. She foresees substantial regulatory reforms, referencing former President Trump's policy of eliminating 2 regulations for every new one implemented, with the potential for even greater impact. Wood also highlights Elon Musk's proposal for a government efficiency department and his possible oversight role, advocating for changes in SEC leadership to reduce regulatory hurdles and enhance market accessibility.
I think the regulations that have been creeping into the system, actually, they started to creep in. They've just flooded the system and really gummed it up. So the biggest regulatory issues have been around the SEC, especially when it comes to digital assets or crypto legislation, and the FTC as it relates to M&A activity. I think both there are going to be big changes there. And that is going to be the beginning, I think, of a lot of regulatory changes. In his first administration, President Trump basically said, for every regulation you want to introduce anyone in my administration, you must get rid of 2. I think it's going to be maybe more dramatic than that this time around. And I also think having Elon Musk, who I think today announced that he'd like to name a new department, the Department of Government Efficiency, get that, DOGE, Doge. I think he's going to come into the administration. I don't think he'll be a formal part of the administration. He'll be more in an oversight role. I think first, as it relates to crypto or digital asset regulation, they're going to replace Gary Gensler with someone who is much more open-minded, I would say, and will let the legislative process go to work. And the SEC is supposed to regulate, enforce laws. They're not supposed to create laws by enforcement, which is what Gary Gensler was doing. So I think that's going to be important. I also think if you look at the public equity markets, I think the number of public companies out there right now has been cut in half in the last 15, 20 years. The regulatory nightmare of being a public company has kept leaders of companies basically saying, if I don't have to go public, I am not going public. And so I think we're going to see a lot more work in that regard to give, the average investor a shot at some of these moonshots. So I think that's going to become very important. As far as the FTC, antitrust has gone way too far. They were denying mergers and acquisitions that really the companies were tangential to one another. They weren't even really in the same market. So we're seeing, and yet at the same time, we've seen these megatech companies grow into, massive organizations and dominating their market. So they were denying mergers and acquisitions for, think about JetBlue and Spirit Airlines.
Yeah.
That was ridiculous. Well, that was in the same industry, but one is going bankrupt now because they wouldn't allow that M&A. They were just dogmatic about it and didn't show to us at least any common sense.
Following the recent U.S. election, cryptocurrency markets have surged, with Bitcoin reaching record highs and analysts projecting a potential $100,000 price target in the near future. This rally has been fueled by the Federal Reserve's recent rate cut, which has heightened investor interest in risk assets. Major cryptocurrencies, including Cardano, have posted significant gains, with Cardano leading the pack by surging 16% within 24 hours, driven by renewed enthusiasm for decentralized finance. US-based Bitcoin ETFs have also seen over $1.3 billion in net investments, underscoring growing confidence in the market. Analysts like Min Young from Presto Research highlight $100,000 as Bitcoin's next psychological milestone, with others, such as Alex Kupsikevich of FX Pro, predicting potential peaks of up to $110,000 in the coming months. Speculation about Bitcoin's role as a strategic reserve asset has further fueled optimism, while institutional adoption continues to bolster its legitimacy. Despite this, some traders warn of potential short-term pullbacks due to post-election adjustments and uncertainties around policies, such as tariffs and rising debt levels. Nevertheless, Bitcoin remains a favored asset for its potential to outperform traditional equities, offering a perceived lower-risk option amid evolving market conditions. As digital assets gain institutional recognition and regulations adapt, Bitcoin's growing role in investment strategies is reshaping financial market. Could Bitcoin's potential as a transformative asset redefine diversification and solidify its position in the future of digital finance? Share your thoughts below. For more Daily Dose Crypto news, check out these two awesome videos on your screen. Click now and we will see you on the next video.